So let's start with the base case. Here, I'm assuming an EPS growth rate of around 14%, which is broadly in line with current analyst expectations. For the multiple, I'm using a PE of 28, and I'm targeting a 15% return with a 10% margin of safety. Based on these assumptions, I get an entry price of around $385. That's meaningfully above the current price of roughly $356, which implies a potential return of about 19%. So even under fairly balanced assumptions, there's already a solid upside. Now let's move to the bear case. Here, I'm taking a more conservative view. EPS growth comes down to 12%, and the multiple compresses to 24. Everything else stays the same. 15% required return, 10% margin of safety. In this scenario, the entry price comes out to around $302. So yes, lower than today's price. But even in this case, the implied return is still around 13 to 14%, which is still quite reasonable. Now let's look at the bull case. Here I assumed slightly stronger growth at 16% and a multiple of 32, which by the way is still below Microsoft's historical averages. With the same return and margin of safety assumptions, this gives us an entry price of around $480. That implies a return of roughly 25% from today's levels. So across all three scenarios, we're seeing a consistent pattern, limited downside and meaningful upside. To bring this all together, I apply a weighted average, 55% to the base case, 25% to the bear case, and 20% to the bull case. And that results in a blended entry price of around $384, which again sits above the current market price. So taking everything into account, this analysis suggests that Microsoft may be both undervalued and misunderstood by the market.